plunged more than 8% today. That's the steepest decline in more than 4 years. As vote counts from the nation's marathon elections indicated that the incumbent Bharatiya Janata Party might be reliant on alliance partners to return to power for a third time. This is in sharp contrast to exit polls which predicted the BJP-led National Democratic Alliance, also known as the NDA, would return to power with a thumping majority. Public sector stocks were the biggest losers, with trading in many of them being temporarily suspended after a fall of 15%. Experts suggest investors rush to take home partial profits after the bull run seen in these counters in anticipation of a thumping win for Narendra Modi.
And for more on this, we are being joined by Mitali Nikor, economist and founder of Nikor Associates, live from New Delhi. Thanks very much, Mitali, for being here on the broadcast. Just to first take a closer look at what the markets have really gone through today, a bloodbath. We've had the Nifty, in fact, tanking about 5%. We have Sensex crashing nearly 4,000 points. If you can just help us put in perspective, how soon do we expect the market's stability to actually return and the volatility to subside?
Thanks, Molly. It's so good to be interviewed by you. I think it's been a very interesting day, both for the election results and for the markets. For the last couple of weeks, we've been tracking the data very closely to look at not only the trends that are coming up in the short term, but also the trends of correlation between election outcomes and the election day results and how markets typically perform. And what we find is that this is a very short-term, event-based phenomenon. So I would not link this with the overall trends in the markets. The highs we saw yesterday versus the lows we're seeing today is, the typical trend that we see pretty much in the last 4 or 5 elections, where on the election day, if there is uncertainty, which is something we are seeing today. We're not seeing the kind of, result matching with the exit polls. And when we see this uncertainty, we will typically see, markets coming out in the red. And of course, the disparity between the exit polls and the results this time has been quite large. And this explains a lot of the short selling that we're seeing today. I do think that the markets will start to rebound again by next week and next to next week very quickly, because the economic fundamentals that we've witnessed in the GDP data, the growth rate of the manufacturing sector are extremely encouraging for the markets and for the real growth of the economy. And this will be reflected in the markets very soon again.
So, Ms. Mitali, are you saying that in a way the volatility we are seeing is in a way limited to the election outcome that might come, and because of that, and that begs the question, in the long term India growth story, does that stay intact?
Absolutely. I mean, at this point in time, when we're seeing the election results, it is clear that, while it may not be a very strong majority for the NDA, there will be a majority for the NDA. The NDA is set to return to power. So the policy continuity which the markets were expecting and in fact aspiring for is something that will be coming through. So that is the first thing that will give calm and will give, sort of that aspiration to the market that yes, there is going to be policy continuity. We are going to start seeing the similar sectors getting the boost that we wanted to see, and that's something that's going to help in the market recovery. So definitely we're going to start seeing that sentiment go back, up again, as soon as there's a little bit more clarity on, okay, now this is the final look of the government formation.
Right. Mitali, also your comments on to what extent will the fundamentals actually change because of the political outcome? That's the immediate concern that arises when one looks at what really transpired today at the markets.
I think what is evident when we look at the economic policy making in India today is that there is of course, and rightly so, in the last 10 years, we've seen a huge focus on the infrastructure sectors and the logistics sector. But there are certain areas of discontent in the economy which are now coming out in the election results. For example, employment generation. It's still a challenge. We have to look at the threat of climate change and how that's impacting, and it's already starting to impact labor productivity. It's starting to impact agricultural productivity. So I think as we start to see the government, the new government, realize that these areas, of employment generation, social protection, and climate resilience also need to be prioritized, we will definitely start to see a policy focus towards these areas. While, of course, the policy focus in sectors, core sectors like infrastructure and logistics continues. But these new areas, which are coming out as areas of some discontent, are likely to be addressed by the new government.
Yes, you mentioned the areas of discontent, but I also want to get a sense from you of what message you really have for our viewers who are tuning in right now and, of course, are quite concerned or worried looking at the way things have gone down today at the markets.
No, I would definitely say that this is an event-based phenomenon. This is not a shift in the trajectory of our markets. Our markets are very sound. The India growth story is very sound. The foreign investor interest in coming to India, especially for, manufacturing, with the production-linked incentive schemes, with the, focus on investment in logistics, it's very, very sound. So I would say that, in the short term, in the next 5 years, what economists say short term is 5 years, right? Which is quite different from what markets believe is short term is the next hour. So definitely I would say that for the next few days, hold on, hold tight, and there is no reason for any panic. And the fundamentals of our economy are extremely strong, and those are going to dictate the future of the markets as well.
Right. Mithali, how do you think the foreign investors and the foreign inflows that come to Indian markets are seeing this? Of course, anyone who has been tracking Indian markets or any markets for that during elections especially, they are volatile. This is how markets usually react. But having said that, you can't be too careful ever with markets. So how do you think the foreign inflow is being taken care of at the moment?
So I feel like at the moment, it's a wait and watch approach. We're seeing a lot of foreign investors hold on and say, okay, you know what, let's wait for 2 days. Let's see what the election results really look like. Let's see what the new government's contours look like. And then we'll start to make the next set of trades, and we'll start to look at the next set of options. So definitely for the last 3 days, we've been seeing a sort of wait and watch approach when it comes to foreign buyers that are in for a longer term horizon. See, the domestic buyer is today somebody who's in to trades and markets for a good period of 7 to 8 months and then relooking at their portfolios. So the domestic investor has today matured quite a lot. Foreign investors who are there for short-term speculation and trading, they are definitely adopting a wait-and-watch approach for 1 to 2 days and will then come back as more active participants in the market when things are clearer.
All right, Mithali, thank you so much for speaking with us. Always a pleasure.
Thanks, Mithali. Good to have you.
Thank you.
All right, now to take that further, we are being joined by our correspondent Siddharth MP live from Chennai. Siddharth, just briefly, about 20 minutes back, we were all talking about what's happening in Telangana, in Andhra Pradesh, and not just the state-wise, but also nationally, how that could pan out. Let's talk about Karnataka. Now, this